I'm Erin Wood, and I'm a tax director in the Schneider not-for-profit industry group. At Schneider we provide a comprehensive suite of services across tax, assurance, digital transformation, and advisory. Our team works closely with both mid-market and large enterprises in the higher education and not-for-profit sectors, helping these enterprises to navigate today's fast-evolving business landscape. This short video is designed specifically for businesses operating in the not-for-profit and higher education spaces. It's been a particularly active year for discussions related to the not-for-profit industry. This was due to the anticipated legislative changes introduced by the One Big Beautiful Bill Act, which was passed by Congress and signed into law earlier this summer. This landmark legislation brings significant tax and operational implications for nearly every business in the United States and has been a major point of discussion in the not-for-profit sector. If you haven't already, we encourage you to check out our full-length webinar hosted by Schneider Tax Advisors. That session offers a deep dive into the bill's broad provisions and is available on our resource page. You can also earn CPE credit by viewing it. Today, we are going a step further by focusing specifically on provisions that impact the not-for-profit and higher education sectors. Discussions regarding what would be included in the tax bill began over a year ago when both presidential candidates were on the election trail. It was highly anticipated that the bill would have significant implications for tax-exempt organizations. The version of the bill passed by the House of Representatives contained numerous provisions that would have significantly impacted our not-for-profit clients. However, many of these provisions did not make it into the final version of the bill that was passed into law. The provisions that were not enacted with the final version of the bill include revocation of tax-exempt status for terrorist supporting organizations, reinstatement of the parking tax, which was previously retroactively repealed, the private foundation net investment income excise tax increase, and taxes on name and logo royalties. While many of the provisions that would have affected tax-exempt organizations were ultimately struck from the final version that was passed into law, there are two provisions which were enacted that have an impact on large higher education and not-for-profit organizations. The first is a modification of excise tax on the investment income of certain private colleges and universities. This is commonly known as the endowment tax. Under prior tax law, Internal Revenue Code Section 4968 imposed a flat excise tax of 1.4% on the net investment income of certain educational institutions if that institution had at least 500 students in the preceding tax year, and the aggregate fair market value of the assets at the end of the preceding tax year was at least $500,000 per student. The One Big Beautiful Bill Act modified this law by adding a tiered tax rate structure with an upper tax rate of 8%. The new law also increased the number of tuition-paying students from 500 to 3,000 for an organization to be considered an applicable educational institution. Schools that are subject to this excise tax will now be required to report the number of tuition-paying students and the number of total students on their Form 990. The bill also expands the application of excise tax on the excess compensation of tax-exempt organizations. Under the previous law, Internal Revenue Code Section 4960 imposed an excise tax equal to 21% of the sum of any remuneration in excess of $1 million paid to a covered employee by an applicable tax-exempt organization. The term covered employee was defined as an employee, including former employees, of a tax-exempt organization if that employee was one of the 5 highest compensated employees of the organization for the taxable year, or was a covered employee of the organization for any preceding taxable year beginning after December 31st, 2016. The One Big Beautiful Bill Act changed the definition of a covered employee to mean any employee, including any former employee employed after 2016, of an applicable tax-exempt organization, not just the 5 highest compensated in each year. This amendment works to expand the application of the excise tax by effectively erasing the limitation on the number of employees that can be considered new covered employees each year. In addition to the provisions of the bill that directly impact not-for-profit and higher education organizations, there are also several that may have an indirect impact on the sector. These include the new floor on charitable contribution deductions for both individuals and corporations, the increase in reporting thresholds for Form 1099, and changes to the clean energy credits. While these provisions are not covered in this session, we encourage you to watch our other presentations or to contact us directly for more insight. As I noted at the outset, this presentation is intended as a short introduction to the ways in which the One Big Beautiful Bill Act may impact higher education and not-for-profit organizations. We work with numerous businesses in this industry, and we recognize many of you have questions about the legislation. We hope our insights were helpful in guiding you to better understand the bill. Schneider Downs has a deeply experienced team of experts in the not-for-profit industry, and we are here to help. We invite you to visit our website's resource page for even more insightful resources. Of course, I'd also like to invite you to reach out to me directly if you'd like to talk further about this legislation or any other topic related to your industry or our services. We do our best work in person, and I invite you to contact me directly at your convenience. Thank you for your time.